There is a question by Mr. Mukul where he says that if there is an NRI shareholder, whether any TDS to be deducted in that case?
No, there is no question of TDS because tax is to be paid by the company, not by the shareholder. Shareholder cannot get the credit of any tax which has been paid by the company. So there is no question of deduction of TDS.
I think, sir, almost all the things you have already covered in the presentation.
Okay, thank you. Thank you, everybody. Thank you very much.
It was a pleasure to hear you again.
Thank you, sir.
So we have now Manoj with us. Manoj, if you can share your view, how you think buyback can be used as a strategic tool, while both Anjali ma'am and RK sir have shared their views. You can also, if you can add some additional points.
Yeah, good afternoon, everyone. So I think most of the things are already discussed. Taxation part is one of the most important aspect while planning for a buyback. So that has been very well covered by Dr. Rajkumar Agarwal sir. And Tushar has also talked about the strategic decisions. Anjali ma'am has already discussed the initial point, and for listed company, what are the basic planning. So obviously the objective in case of listed company remains the similar, like one, to give return to shareholders, which may have positive impact on the share price of the share in the market. Sometimes where there is high volatility in the market of companies' shares, then issuance of buyback at a certain price would stabilize the price, and it obviously gives return to the shareholders at a tax efficient manner. So shareholders are generally happy about the buyback. So that is one of the most important criteria for deciding this. Then it is always, we have seen that in case listed companies having cash surplus, which is not getting invested immediately for any project or any business, then it is always a pressure from the shareholders' point that why this money is lying in the books, which is not getting value in the market. Generally, market value of the shares based on the price earning multiples or earnings which are happening every year. So in case there are cash which is only giving maybe certain return in the form of interest from FD or something, market does not like that type of return on the market. So because we know that the cost of equity is much higher than cost of debt or any return which is 6 to 8%. Nobody expects 6 to 8% return from investing in the capital market. So it is always advisable to go for a buyback and buy out certain shares, which will return the money to the shareholder. Surplus cash is utilized and balance sheet becomes healthier. Whatever assets are there, all are deployed for the business development purposes. So surplus cash is gone from the balance sheet to a certain extent, and which is received by the shareholder at a lower tax rate. So that is one of the most important criteria for a listed company. Obviously, we have to see all companies are not good or not fit for going for the buyback. So if it is already highly leveraged company, like company has a debt equity ratio much higher, then it is not advisable to even consider the buyback as a tool to give return to the shareholders. Obviously, bankers would not object to a regular dividend return, which is going in on annual basis. But if they go for buyback, it is a capital kind of transaction. So bankers would also take it very negatively, and this can be a negative for the company to go for such kind of transaction. So yes, we have to see the health of the balance sheet, see that there is no deployable use of the cash in immediate or near future, then only go for the buyback planning. All other plannings have already discussed. But I would like to discuss some of the very important aspect in case of unlisted companies. So why unlisted companies go for buyback? As RK sir was telling, and obviously we have already discussed that tax is one of the very important reason. If the company is earning good revenue, good profit every year, and the promoter want to take out the money, the dividend is very costly affair, because as RK sir was telling, it can go taxability can go up to 39% in the hands of the promoters who are the major shareholders if their earning is 5 crore or more. So in such cases, buyback is much tax efficient. The cost goes into the company's book, and it will be tax free in the hands of the promoters. So they will prefer to have this. But we have to, like RK sir was telling, there can be different plannings. Like there are one set of shareholders who want to take exit from the company, and general way is to buy those shares by the remaining shareholders. But instead of buying at their own pocket cost or cash outflow, that can be shifted to the obligation of the company. Company can bring at a buyback issue, and the shareholders can tender their share in the buyback and exit from the company, taking the money in a cash neutral manner. So promoters' object of giving exit is also fulfilled, and buyers, sellers are also get tax-free income. Otherwise, it will be a capital gain situation in the hands of the seller shareholders. So that can be one of the scenarios. Similarly, there can be scenario where internal percentage shareholding need to be reclassified, regrouped. For that, certain shareholders may tender higher number of shares, others may put lesser number or no share in the buyback issue, and in that manner percentage shareholding can be balanced. In such case, buyback price can be lower or near to the book value of the company. So in that case, there is no tax in the hands of the company also. So at zero cost at the book from the books of the company, zero tax cost in the books of the company, shareholding structure can be ratified. So such kind of plannings are very well prevalent, and wherever there are private equity funds which are, and the company is not in a position to go for IPO in a limited determined timeline, they prefer to go for buyback issues in such cases. So these are the plannings, and I think we have well covered many of the things. So let's move towards the question answers and try to address as many questions we can address. Thank you.
Thanks, Manoj, for your view. So I'll start with you. Received a lot of questions both before the webinar and during the webinar. So I'll start with the first one. So Ms. Neha Goel.
Ankit, can you be a bit louder?
Okay, I will try my best. So Ms. Neha Goel has asked a question: how to calculate value of buyback shares? So any of you can
see? As I said in the PPT as well, the buyback is freely priceable. It ranges from even 10% to even 90%. It depends upon management to management, how much they want to return the value and what asset do they want to liquidate for the purpose of coming out with the buyback. It depends from management to management.
The regulator has raised question on the buyback price?
No.
And I think in case of unlisted companies also similarly, you are free to price it.
Yes, it can be at discount or premium, anything it can be.
Anything.
Then Mr. Unmed Mal Jain has asked, stamp duty payable on buyback of shares. I don't think there is any stamp duty that is payable on buyback of shares.
No, it is a cancellation of share. There is no duty.
And Ms. Neha Goel again, if public will tender shares in buyback, then what will be the status of holding of promoter?
It will go up. If promoters do not participate, the percentage will go up.
Okay. Then Mr. Vikas Parikh has asked whether selective buyback is permissible?
No. In fact, in the buyback regulations, Manoj, you may add if you want to, but it is clearly negated that negotiated deals are not permissible.
No, it is not about the negotiated deal. But practically, if someone is not tendering in the tender offer or buyback, nobody questions it, and it is just commercial decision of the individual. So, like I discussed, in case of closely held company, there is a private equity fund which need an exit, and structured. It is a buyback is structured where offer is given to all, but the promoter does not tender any share, and all the private equity funds tender. That's totally valid. So, it is a selective buyback, but obviously, offer is given to all.
Yeah, I think that's a way to do it. I think Mr. Pankaj,
company cannot discriminate between the shareholders, but shareholder can decide their own fate.
Themselves. So, Mr. Pankaj, I believe your question is also answered. So Suresh has asked whether permission of RBI is required for buyback in case of NBFC.
There is no requirement of prior approval of RBI.
So, Mr. Vineet Kumar has asked, can we go for buyback one after the another? Yes, I think there is no.
It can be year after year.
Yeah,
but in 1 year we can come out with buyback only once.
Okay. In Mr. Darshan has asked, in case of open market buyback, how it will support falling share price?
So I think Tushar has well said, and ma'am has also discussed. if it is a open market, we have a kitty of fund to be bought and upper price at which it can be bought. So based on the supply, the market price falls when there is a supply, higher supply than demand. So demand can be created by the company from this kitty, and hence all the demand supplies are absorbed. So price would not fall.
Okay. So Charu, this is for you. Miss Divya Chuk has asked, how to buy back shares from the shareholder that are not traceable, and what will be the treatment of such shares?
So in case of non-traceable shareholders, so basically those would be in the private companies only, I guess. But traceability, if they are not traceable, how can we say that we can buy back the shares from them?
Offer
Happens if-
is made to all the shareholders, whether traceable or non-traceable. But somebody who is not traceable obviously will not be in a position to tender the shares.
and it will apply both, even in case of a private company or a
Yes,
listed.
yes, both.
In fact, in case of listed company, there are hundreds of thousands of such shareholders
Yeah.
who might not be having the email ID, not given the email ID, or not getting the annual return. So they will not be getting the notice also. But notice is published in the newspaper also, and stock exchanges also. If they want to proceed, they can get their shares rectified, dematted, and then tender in the offer.
Rather, Manoj, in case of tender offers, SEBI specifically directs us that we have to take special efforts to reach out to the physical shareholders and non-traceable shareholders so that they are in a position to participate in the offer.
Yes.
Mr. Akshay Kumar has asked a question whether a company can convert their CCPS into equity and then do the buyback of these converted shares from the proceeds of CCPS.
So if the object of the CCPS was to do the buyback, then it is permissible. Otherwise, if the
CCPS to do the buyback.
so otherwise, no.
No, it is. I think the question is that if you are increasing the paid up capital by converting paid up equity, and then you are buying those equity, is it permissible? That is the question, I think.
As restriction as such.
It's not clear. I don't know.
Okay. Mr. Mukul has asked for rules on private company regarding buyback of shares. I think, Mr. Mukul, they are detailed rules. I don't think this is
Securities shares.
our procedure book to get much clear detail on as to how to buy back shares of a company. Then Mr. Nishchal Mittal has asked, is there a ceiling of max 25% or number of equity shares that can be bought back in one tranche?
The ceiling is for the financial year, not for the tranche. It is for the financial year.
I think there is some confusion in this respect. The law says that the amount which can be utilized should not be more than 25% of the paid up capital and the free reserve available with the company. And what quantum of shares can be bought back is not clearly written in the act or law. Earlier, it was clearly mentioned that not more than 25% of the paid up capital can be bought by the company in one financial year. So,
Sir, in the recent amendment, they have again clarified the explanation.
They have covered it.
in case of SEBI listed company, but not in the companies.
Not
in numbers also.
Yes.
In unlisted companies, as Manoj said, these positions there continues to be this confusion. Okay. Then Aishwarya Madan has asked how to extinguish the share certificates practically.
So, in case of share certificates, the physical share certificates are destroyed by the RTA, which they receive, and then the shares are the number of shares which are accepted, and this split. The share certificates are split, and the remaining for the remaining shares, the new certificates are printed, and for the old ones, they are just torn out and extinguished. And
But
the new,
for example, in case of listed entity, does this happen in presence of any company official or the merchant banker, or it is leaves to the discretion of the RTA?
sir, it generally happens in front of the company.
I think rules has a specific provision relating to how to destroy and deface and destroy those shares. So it has to be in the presence of, I think, official and who will make entry in the register of buyback and then destroy the physical shares. So within 7 days from the date of receipt of the share.
In case of a buyback up to 10%, whether we need to have a mandatory provision in the articles?
Articles.
Any articles there has to be a provision in the articles for any buyback.
This was asked by Ms. Meeta. Okay, so Prashant Khatri has asked, what is the reason of eradication of buyback from open market?
So I think as I mentioned, that the companies used to declare a price, but they used to buy back at much lower price at the running market price. So it was virtually a eyewash, and that is why SEBI wants book build methods to be encouraged, wherein a band would be there, and the public will have an option to tender at any range in between that band.
So it is more like there has been a cases, or there has been a thought that buyback from the open market is used as a tool to manipulate the market price or volume, manipulate the volume of company share, because threshold is kept at a higher rate, and then obviously price is pulled towards that through need-based selective purchase. So sometimes even zero purchases were made, or very little share were purchased, and the price got up. So that kind of manipulative practices have been found by SEBI, and hence they want to curtail this.
Okay. Mr. Prince Parashar has asked, can a company withdraw buyback offer once made public?
Once PA is given, after that it cannot be withdrawn, but before that it can be.
Okay, so once if I just give an intimation and then before the PA I want to withdraw it, it can be done.
It can be withdrawn. We have seen that in past cases.
Okay. Okay, Mr. Rajiv Sir has raised a query. He has raised a request to upload the video recordings of earlier webinars. We'll try to do that. I'll ask my team to quickly work on that. Mr. Shiv Kumar asked, can a member buy back those shares which are not accepted by a member in case of a private company wherein the overall shares offered for buyback doesn't not change? I believe he's talking about can a member buyback. I believe there is a situation where you offer additional shares. They're offered, he doesn't offer his shares back to the company. But in case any other member who has been offered and he has been given an option to give an additional offer, I think in that case only it is possible. Otherwise, if it has been offered to a person, he doesn't buy back, doesn't accept the offer, then the other person don't have any right unless and until he has been given an option to give an additional share. Valuation, Mr. Vikas has asked, valuation report required to be obtained from registered valuer or merchant banker. So as we discussed,
in case of book build issues, valuation is required from registered valuer, not merchant banker.
Okay, but have we discussed there is no need of valuation? Tushar?
Otherwise there is
in case
but to decide a base value, this is a new amendment. Previously there was no requirement.
Charu or Tushar, your voice is vibrating. One of you have to mute first.
Tushar, you meant to say that in case of a buyback through book building, we need to obtain the valuation report from a registered valuer.
For a base value.
Okay.
In case of infrequently traded shares. For a frequently traded share, not required.
Otherwise, it is not required in case of unlisted companies. Yes, but in case of unlisted companies, it is only required in case there is a buyback from a foreign resident, because then the FEMA provisions will trigger that is applicable to shares. So you have to consider the buyback accordingly, considering you require report from either the merchant banker or a CA. Okay. Mr. Amit Chaurasia has asked, in case of a listed company, after a buyback, or a company cannot raise capital for 1 year from closure of buyback period. Does capital include CCPS or CCDs or both?
Yeah. You're restricted from issuing any specified security, and CCPS and CCDs are included there.
Even I cannot issue a convertible security.
No.
That will take place after the year.
After the year.
That is not possible. That is not allowed.
No.
That is, the law is very much clear that if you are buying back, you are reducing the paid up capital. Then once you are reducing, why again immediately increasing it back to the same level?
Then another question from Mr. Amit Chaurasia. In case of a listed company, in case of a tender offer, can I only accept shares offered by the promoters and ignore public shareholders?
Not at all.
No.
Not at all.
as we discussed, there is no selective buyback in case of a listed entity. Okay, Ms. Akansha Gupta has asked, can managing director holding shares in the company participate in the buyback offer provided he is related to the promoter, as promoter is restricted to participate in buyback through open market as per SEBI buyback regulations?
So under the open market, promoter and promoter group is restricted. So obviously, if the MD is related to the promoter, he'll fall within the ambit of promoter group. So he'll not be in a position. He'll not be in a position to tender. Yeah.
If he follows the definition of the immediate relative.
Yeah.
I did, yeah. Okay, can we get a copy of, you will get a copy of all the presentations in all the webinars that we do. Whether benefit, Kapil Sangvi, I believe, Manoj, this can be answered by you. Mr. Kapil has raised a question. Whether benefit of lower tax rate in capital gain, article of DTA, can be claimed for buyback tax?
No, as RK sir has clearly mentioned, it is a liability of the company, and company is obviously Indian citizen, Indian resident for the tax purposes. So it has to pay the tax, and there is no set off or tax is not deducted, no withholding taxes they are applicable to the shareholder who is non-resident. So no benefit of DTA can be claimed by the person.
And there is another question that in regulation 17 subclause Roman 2 of buyback regulations, a record date has to be announced, whereas in the presentation which we made today, it is mentioned that no record date is required.
Ankita, there is a request. You will have to be louder.
I am trying my
best. One of the participants has messaged me.
I am not audible.
I probably.
So I'll try my best again. So in our presentation, have we mentioned that no record is required in case of a stock exchange process of buyback?
Yeah. Because open market is open for a period of 6 months. Anybody, even if I buy the shares today, I can tender it tomorrow in the market. So there is no significance or no need of a record date in case of open market. Okay. Tender route, yes, of course, a record date is needed.
Okay. Valuation we've already discussed. This is again. And then Vidya Pawar, if there are different types of equity like normal equity, equity with differential voting rights, whether buyback offer shall be given to all types of the equity shareholders?
I think it is to a specified class of equity.
Board has to decide for each class of shareholder what they want to do. Each class is different. In case of listed company, obviously, if we have listed 2 class of shares, we should generally give offer to all. But otherwise, privately held company, it can be for differential voting right. Different persons, different treatment can be given.
Another question: in case of a listed entity, the buyback amount, the 25%, whether it includes the buyback expenses?
No. It's clearly mentioned, excluding transaction costs, brokerage, all those things.
All these things, sir. Okay.
Yeah.
Tax is also over and above.
Tax is also over and above.
Okay. The valuation is required in case of buyback in private company. Mr. Arun, we have already informed that buyback valuation is not required. Only in case of mandatory where you are buying back from a foreign shareholder. Otherwise, it depends upon you. If you are want to give it a fair value, then you need to get itself valued, and all the valuation under the company that are done by a registered valuer. So Amit Chokasi again, can you throw some light on trading window concept in case of buyback?
So, as per the guidance note issued by SEBI, since a buyback or a rights issue or offer for sale is being given to all the shareholders, so trading window concept is not applicable in such cases. So the designated persons can tender even if the trading window is closed.
But we have to be careful. It is the planning is going on, then those who are involved in the planning should be considered to be restricted from trading in the market, because it is a price sensitive information. So if it is in public domain and tender time is coming, they can tender it.
Okay. Selective buyback, we already replied. Manoj, what's the usage of the reserve that we create after buyback?
So it is a capital kind of reserve, and obviously it can be used for issuance of bonus shares. Other than that, it can't be used for any other purpose.
Okay, Mr. Satya, calculate value we already shared. Mr. Umaid, who has asked about stamp duty earlier, he has again mentioned this point that NSDL asks for stamp duty on buyback of shares through tender offer. No,
Taru, have we received any such query from NSDL?
No, ma'am. Never.
Okay, I think we'll check back again with NSDL and see why they're asking for the stamp duty, and we'll come back to you, Mr. Urmil Jain. Is it, Mr. Kushal has asked, is it possible to force all these shareholders to buy back in their existing proportion? I don't think it's an offer, so it's up to the shareholders whether to accept that or not. Okay, and another person has also mentioned the same point that stamp duty was asked. So Charu, we better get it checking.
We'll check it.
Okay. So in Mr. Ever asked whether it is mandatory to comply with the minimum public shareholding requirement
So,
to achieve MPS?
no, in case post buyback, the MPS is breached. The promoter is at 70 and by virtue of buyback, 76 पहुंच गया. So within a period of 12 months, he'll have to bring it down to 75 by following any of the modes which have been allowed by SEBI.
It can also be used to meet the requirement of MPS if I have at for
Buyback? No.
Cannot do it. Okay. Okay. So Mr. Anup has asked, in open market purchase, 25% of the daily average turnover of shares for last 10 trading days is the set limit for a bid on a particular day. So whether the volume of buyback done is to be included for computing average to be included or excluded.
So see, this point has been amended only recently, and even we are trying to assess as to the implication thereof. But what we understand, of course, with the buyback that has been done on a particular day will be included while computing the VWAP.
In case of open market, we cannot differentiate between the
Yeah.
buying by the company or buying by third party. It will be combined volume only.
Okay, Manoj, Mr. Kapil has asked, can FTC of buyback tax can be claimed by NRI in country of residence?
No, as it is a cost of the company, nobody can claim any expense or benefit out of that.
Okay.
Even companies are not allowed to take advantage of buyback tax as an expense in their books.
Mr. Manoj Jain has asked, can IPF authority tender shares in buyback?
IPF authority, I don't believe they are just a custodian. They cannot participate or take a decision on those shares.
I am trying to be louder, Ms. Vidya. So Ms. Prachi has asked, in case of private company, can we buy back the shares of a foreign national on face value of shares, even if we issued the shares to other shareholders on premium value within 2 months?
Yes, because as per the SEBI FEMA law, higher there is a restriction on purchase at a price higher than the fair value. So lower than the fair value is allowed, so you can buy.
Okay. Is buyback tax payable in case of open market buyback?
Yes,
Yes,
sir, it's payable.
What is buyback tax? By the company?
Yes, by the company.
By the company only, and the investor who has tendered shares in the buyback will get a message for the portion he sold in the market and got selected in the buyback, and so that he can claim his exemption. And on the part which got sold in the normal market, he has to pay LTCG, STCG accordingly.
Yes.
There is an interesting question. I think this is always a point of confusion. Mr. Hemant has asked, what does completion of buyback means? Is the date of the payment of consideration or the date of extinguishment of the share certificates?
I think it is
Payment of
payment.
Consideration.
Payment. We believe we all follow payment.
I think even in
Ma'am, it's written in the regulations
It's
itself.
virtually written. Yeah.
in the rules under the Companies Act, it says 7 from the completion of the 7 days. And if you read the rule in the context, it will mean definitely the date you make the payment.
Right.
Okay. Most of the questions are of valuation. Ma'am, Mr. Anup has again mentioned that in case of market buyback, record date is required to be announced to determine the date of the opening of buyback. Please refer Regulation 17 subclause Roman II.
It has been added, and we are still trying to understand what is the purpose of mentioning a record date in case of open market buyback, because there is no eligibility criteria like in tender offer and in any other corporate action.
I agree. I don't think because
So, but the timelines are moving according to the record date. Like within 2 working days of record date, you have to do this event and this event. So we still need to understand this purpose.
I
It
think
is mentioned over there.
record date in true sense, while they are taking it as a record date, because it's not the, as you mentioned, during the entire period of the buyback, anyone can buy and sell the share or tender the share. There is no one date on which you recognize the
Yes,
shares
sir.
are eligible to buy. Okay. Time gap between 2 buybacks, I think 12 months is the time gap.
360.
Once a year, yeah.
So Anil Shah has asked, can the company offer different purchase for different voting right shares issued by a company? I believe,
Yes.
but they have to offer a separate buyback offer.
Yes, there will be separate buyback
They will be
offers.
separate.
It is
Okay.
generally for closely held companies. Yes, if they are different series of equities and having different rights, then different buybacks would come, and for that prices can also be different.
Ms. Sandhya has asked whether standalone consolidated financials are required for buyback limit for unlisted companies. I believe for listed,
Whichever is stricter.
consolidated, but under the Companies Act still continues to be standalone. There is
Standalone, yes.
consolidated financials for under the Companies Act. Okay. Can ESOP, Mr. Mandeep has asked, ESOP trust tender shares in buyback? I don't think ESOP trust tender shares. Okay. Emriel Pereira has asked, if company has done conversion of CCP to CCD into equity, can it do buyback after conversion? Does the company need to wait for certain timeline or period before they opt for buyback? I don't think there is any such timeline.
No timeline is there.
Okay. BSC and NSC on their website, Mr. Anup has asked, BSC and NSC on their website provide separate data of volume of normal market data price and that of buyback on a particular day. Is this appears to be a question to you?
Maybe they are trying to relate it with the pricing. Pricing we need to connect with the volume thing.
Okay.
In the case of open market buybacks and
BSC.
BSE.
I think this is comment relating to what we had discussed, that there is no separate differentiation for VWAP purchased by company and purchased by others. So he is saying that we can get the differential data. Differential data is available on BSE and NSE.
Thank you. So Ms. Pooja has asked, as per Regulation 5, subclause C of buyback regulation, it is necessary for the company to apply for lender NOC even if there is no breach of any covenant. And if yes, at what stage do the company is required to apply for NOC, as the buyback of shares will be UPSI unless becomes publicer?
Any NOC before board meeting.
See, the way the companies interact with the merchant bankers, because it is still a UPSI, they sign an NDA with us. Maybe on the same basis, they will have to apply to the lenders as well for their NOCs before the PA.
So this is applicable even in case of WC limits?
Even in case of
working capital limits.
Working capital limits. Working capital limits is not lenders actually.
No, they are lenders, and yes, whether it is financial creditor, it is a financial creditor, whether it is for a long-term purpose or short-term purpose. Yes, if there are debts in the books, we have to seek no objection.
Sir, Vinod has asked, if company issues check against buyback of shares, what date will be considered as completion of buyback?
Payment, I think we have discussed this.
If payment, the mode of payment is check, so check clearance should be our just issuance of check. That is the question, I think. So I think reasonably, so company should issue the dividend.
Now it's not check. Now it's automatic. No, through the
listed
bank
company you are
account.
talking, ma'am. There
Bank
may be
account
closely held
connected with
companies. There may be closely held companies also.
Then it's a different right.
Jinal Sangvi, how will company came to know their tax liability? I think they have to apply the formula that's given under 40 BB.
Yes.
I'll want to explain this. As R.K. Agarwal sir also said that the company has to follow the FIFO method, meaning thereby if the company is doing a buyback of 10 lakh equity shares and the pre-IPO issue shares were 1 lakh at the rate of rupee 10, then in those 1 lakh, in respect of 1 lakh shares, the issue price would be 10. Then the company came out with the IPO of 5 lakh shares at rupee 100. So then in that respect of those 5 lakh shares, the 100 would be the cost of acquisition. And then preferential allotment at say 150 rupees. So in respect of balance shares, 150 rupees would be the issue price, cost of acquisition. Accordingly, this is how the FIFO is applied.
Okay. Miss Sir Om Prakash, if the company has different type of shares, whether permission of other shareholders is required for the value to be paid?
Variation of class right, it is more, if it has impact on the value of the shareholders, yes, approvals should be taken.
I think if it is put to the shareholders vote, I believe all the shareholders will be participating.
It will not, it may be separate class meetings also if different classes are there. Generally, in case of closely held company, shareholders agreement provides special rights to each class of shareholders, and accordingly you have to work, you have to see what are their rights. In case of buyback of share, prior approval is required in most of the share purchase agreement. So yes, to go.
Yeah, in case of private company, if acceptance is given and tendering of shares is done after the offer period, can those shares be accepted? I think generally not. In case of closely held company, but you can come out and still make an exception. Mr. Aditya Bansal, whether shares sold by a shareholder in the open market, how he would know that whether the shares are sold to the company or to anybody else, or is there any separate window on which you tender shares in the open market?
In case of open market buybacks, you get a message. Let's suppose you sell 10 shares in the market, and like any other buyer, the company is also standing.
Charu, mute yourself, please.
Yes.
I'll repeat again. For example, you sell 10 shares in the market, and like any other buyer, normally in the market, the company is also standing to and has placed a buying bid. So your shares may go 5 shares to the company or 5 shares to other buyer. So the portion for which your shares have gone to the company, you will get a SMS, because when the company places its bid, it places in a particular code, and your shares when go to the company, it matches that code and you get a message. The NSDL CDSL has this mechanism. You get a message so that you can know that these many shares I have sold, these many went into the buyback, and I can claim my exemption from the tax on these shares, and the company will pay the tax, and partly shares I have to pay accordingly the tax I have to pay.
But now to add to Tushar, but now as we have discussed
There is a
that we
window
have to
mechanism.
take the window, so it would be easy to see the tendering, the shares which have been purchased in the open market.
Okay. So this Divya has asked, lenders NOC required in case of private companies? No, it is not required. If Ms. Asmita is asked, if company has made a subsidiary company in USA and purchases 100% of its shares of this company, then when I have to show the share payment in balance sheet or investment or others, I don't think it is relevant. But yes, if you making an investment, it will appear in the balance sheet. I think Asmita, please clarify your question. Mr. Dhirendra, my buyback approval, but master data not updated. Please take note, Mr. Dhirendra, the master data will be updated from the annual return, not the SHA 9. Okay. Tushar, Mr. Aditya has asked if message not received, whether any other method to know shares are sold in open market or in buyback?
If not received, that means it has not gone into buyback. But now the Windows concept has been introduced, so you will know the shares have gone in.
I'm still not audible to lot many. I'm very sorry. I'll try to look into the issues next time.
Very much unlike Ankit.
So we have done all the questions that were posted on the chat box. There were certain questions that we received offline, but I believe almost all these questions are covered in what we have replied today. So thanks everybody for joining in such good numbers today, as always, and thanks to our panelists. And I'll happy to announce that next webinar is when we are celebrating our 3rd anniversary. So while we did start in an unfortunate period of COVID in year 2020, but I think the journey has been superb thereafter, and it's all because of your positive support and encouragement. We continue to deliver on our Friday promise every week, and we look forward for your participation in the 3rd anniversary webinar. That's the 125th webinar, and we have chosen a very important and topic of how to reduce burden of court cases in India, relevant for today. I don't know whether we are able to give any solution. It's a problem in my life I will be able to see any solution or not. But we have a very eminent panelist to be there and to participate. And I welcome all of you, as always, to be joining us in huge numbers. And we look forward for your presence in the 3rd anniversary webinar next Friday, 28th April, same time, same place, and we'll see you then. Thanks everybody for your participation.